So IR35, it's become more and more common in the last few years in self-employed individuals and, in theory, limited companies. IR35, in short, is HMRC checking to see whether you are working for more than one person. So if we take, for example, the usual, pick a trade, for example, a plumber. A plumber might only be working, he's subcontracting work for British Gas as a subcontractor. Now, obviously, the differentiation between self-employment and employment obviously comes into this on the basis of the fact that self-employed, they work for themselves, they aren't told when to work, they will work on like an invoice basis, and they can also send a substitute to do their work. But that's the key thing in this, really. When you then talk about an employee's got all the employment rights that anyone on the payroll would have. That'd be holiday pay, sick pay, auto-enrollment pension. The IR35 ruling is there to stop subcontractors and employers, i.e. contractors, from taking someone on who just works for them and avoiding paying PAYE, national insurance, holiday pay, auto-enrollment pension, sick pay. When you are working for somebody under IR35, you will provide all of the tools that you would use yourself, so whether that be a computer, a phone. If you aren't and you are being given that, it's what HMRC could then call deemed employment, because you are getting the rights of an employee. So as someone on a payroll, someone who is employed, who is paid obviously on a monthly pay slip or a weekly pay slip, they will be given the likes of a laptop, a phone to use for their business work, which will be provided by the employer, whereas IR35, self-employed individual, for example, will have to provide that themselves. If they aren't, as I say, deemed employment comes into it. That's what would be perceived as deemed employment. So they would have to pay the tax that they would owe, the employer would, if HMRC did an IR35 visit.